Bitcoin is $3,000 away from new all-time highs, and in this video I'm going to explain to you how to trade all-time highs on crypto. Now, this is not a video where I'm going to run you through Fibonacci extensions or negative fibs. It's going to be more about the concepts that I love to use that are more related to order flow. So if you want a video regarding fibs, there's like millions of them on YouTube. Just search them up and you'll find them. In this video, I'm going to run you through two different types of trading all-time highs, how to find your take profits, your stop losses, and also how to find high probability setups on the chart. Now, first things first, we will divide the all-time high run and the expansion into two parts, because I think with every all-time high run on Bitcoin, there are certain characteristics that are coming with the area we're covering. Because as we all know, when we are at all-time highs, the price is in zones where no one is aware if there is resistance or support on those zones. So what that means is we need to make sure that we are looking at the historical data and understanding what happened the previous times when we were hitting all-time highs on the chart. So when I look at it, I see two parts. And for me, those two parts are the first 2 weeks of the expansion and then the ranging period of the all-time high run that comes in after the 2 weeks of the expansion. What I mean by that is, if we look at the price action that occurred during our previous all-time high run, this was when it started, right? So when Trump was elected into office in the 6th or 5th of November, what we had a beautiful run, a push higher on the chart. And at this point, everyone was bullish, which is completely valid for an all-time high run, because that's what you want. You want people to be interested, you want people to be investing, and you want people to be bullish on the chart. So that was the case when Trump was elected into office, and we had this huge run to new all-time highs and to up to $100,000 on the chart. If you talk about this with someone, they will probably tell you that this was amazing times on the chart, and it will always feel like it will always feel longer than it actually was. If we look at how long it took for us to go from $74,000 up to $100,000, it was only 2 weeks, right? We started from the 6th of November and we ended that big push in the 23rd of November or the 22nd of November, whatever you want to call it. So this is a 16-day run. And this is what Bitcoin all-time high runs are usually about. Even though they are extremely glorified, which I completely understand, it's great to understand that Bitcoin is a ranging market with certain trends that are happening from time to time. This is not an asset class that is like NQ or ES, where we consistently put all-time highs every single month. So what that means is the first 2 weeks of an all-time high run is the most uncharacteristic Bitcoin time that could ever occur. So for me, when I'm analyzing the chart and what is happening when we are pushing at these all-time highs, the characteristics of what's happening is so much different than what we usually do. And let me explain that. So let's first talk about what happened after we broke the all-time highs that we put in on March. Here we can see after we pushed above the all-time highs, the number one thing that we should remember here is that the liquidity in Bitcoin, just like any other asset class, lays below these lows. Like every one of these lows, there is liquidity, and if you are a trader who is interested in day trading, these are the levels that everyone tells you that we should sweep and then push higher on the chart. Well, if we look at the chart right now, what you see is a move and moves on the chart that is not that common to see, especially right now when we're not at all-time highs. What you usually see is when you have a low on the chart and you want to push higher, to find the fuel that you need, what will usually happen is we'll push down, take out those lows that we put in, and then start pushing up on the chart. Or similarly, if you have lows like these on the chart where they are really close to each other from the same day, what will usually end up happening is we will come down on the next day, and this is a Thursday, we'll come down, take out these lows, and then start this push higher, and we will find the fuel that we need below the previous day's lows. So we end up actually protecting these lows, we end up protecting these lows, and even more interestingly, we end up protecting these lows as well. these look like the most takeable lows I think I've ever seen on the chart. And when we push higher on the chart, we come down, and rather than taking those lows that are from the 8th of November and the 7th of November, we actually put in a higher low on the chart on a Saturday. If you know Bitcoin and if you have traded charts for a long time, you know how unlikely these situations is, other than these 2 weeks out of the 52 weeks that occur on Bitcoin on any chart. So in this case, we come down, we don't take out these lows right here, and then we have this beautiful push up to the upside. And if you trade the first 2 weeks of the all-time high run, just like any other week, what you will realize is you will miss out on every single move on the chart. And what will usually end up happening is it will maybe give you one opportunity, like this one right here we had on the 10th of November, where we will sweep the lows of the same day. Not the previous days, not the previous weeks. It will maybe sweep the same day's lows, where it will give you an opportunity to enter the market around here. But after this point, in this 16-day run, there is not a single time that we are given a great buying opportunity in the market. As you can see, after this low was put in, we have these lows right here. Price comes down, doesn't take out these lows, doesn't even take out these lows right here, and pushes higher. Comes down, has this low, and while we are pushing higher, one of the most common moves that you will see during these like small ranges is price will come down, take out these lows, and then find the fuel and push higher. And it doesn't even do that. As you can see, we have another higher low being put in right here. And I think the most bizarre one actually comes in around here, where you can see that before we actually put in our top at $90,000, we have these lows from the 11th of November. Price pushes up $3,000 up to around $90,000, comes down, doesn't take out this low, pushes up, doesn't take out these two lows, and then puts in a high around $90,000. So if you know Bitcoin, if you know how it moves, you would know how unlikely these moves are, other than these 2 weeks on the chart. So I think there is a clear sign that is showing us that the moves on Bitcoin that happens during these all-time high runs, especially in the first 2 weeks, are unlike any other week on the chart. And if you look at the price action here as well, you'll see the same thing. From $85,000 up to $100,000, look at how many week lows we have on the chart. And this is a trend that is going on, where we just keep putting in higher lows, higher lows, higher lows, higher lows, where no one is able to get in the market. Because if you look at Twitter around these times in November, you would actually find out that a lot of people were just looking for these liquidity sweeps like this on the chart so that they can take longs. And the biggest reason why this happens on the chart and why we don't take out these lows is simply because everyone is interested. If we end up pushing to new all-time highs in the next week or next month, what you will see is everyone will be interested in Bitcoin, and you'll see news, you'll see newspapers, you'll see X, YouTube, Sky News, BBC, everyone will report about new all-time highs on Bitcoin. And what that does is that gives a extra layer of FOMO in the market where nothing else can actually give it. And what that usually ends up doing to the market is, when you have an extra layer of FOMO on top of the already FOMO that is happening with crypto on the charts, you end up front-running major liquidity levels on the chart because everyone is interested in those liquidity sweeps. So people just front-run those limit orders and put them around here, just a couple dollars above the original lows that they were originally thinking. So this is a common practice for Bitcoin, and this is November prices, but you can go back and check out what happened during the 2021 run as well. Right? So we had this push above $20,000 on the charts, and you can see here as well on these moves right here. If I do this, I'm not going to risk it right now. From these lows, you can see it as well. This is the daily chart where we have a daily low right here, another one right here, another one right here, another one right here, and none of them gets taken out. Like, the likelihood of this happening on a normal market is so low, and you just don't get surprised when this happens during the first initial 2 weeks of an all-time high run. And the reason I say the first 2 weeks is because if we just look at the past data on Bitcoin, what you will soon realize is that these moves, where people think as expansion moves, they don't happen for a long time. As I said, this is not ES, this is not NQ. When we have moves like this on crypto where we are pushing higher on the chart, we are hitting levels that we have never hit before, it doesn't take that long to actually come to a range. Here we can see after breaking these March highs on the chart on the 6th of November, we ended up actually coming to a like a situation where the chart had enough in the 21st of November. So this is a 2-week run on the chart before we eventually had a 2-month long range on the charts. And this is the same case for when we had the breakout on 2021 as well. When we broke out of $20,000, the $13,000 highs on the chart, we came up and we started the run in like 22nd of October, and we ended the run around the 17th of October right here. So this is a 2-3 week run, and after this we end up actually having a range that lasts for a whole month. We push up, and then this push up after this month of consolidation, right, starting from 16th of December, ends around the 3rd of January as well. Again, around 2-3 weeks, and then we have another range that lasts around, how long is this? 3rd of January, that ends in 7th of February. So another month of ranging. So what I'm trying to get to at this point is, if you just look back at the data that is coming from Bitcoin, what you will soon realize is that those expansion moves that people love to talk about, that always becomes the talk of the town, that where people get invested, where you see Bitcoin on weird places on Facebook, on TikTok, everywhere that you look at, it's Bitcoin. That is only 2 weeks out of a calendar year. So what that does is that basically means that those 2 weeks should be traded in different ways than you normally trade it. So what can you do? How can you trade it? Well, for me, normally trading is really simple, right? You look for zones where there's liquidity on the chart, and when you sweep those liquidity zones, now you can look for formation change and you can push higher on the chart. If you want a graphic example of this, you can think of it like this. So we have these moves right here. You know that this is where the liquidity is at, so you can wait for a push down, take out those lows, look for a structure change, and then enter longs right here. But unfortunately, this will not happen in the first 2 weeks of our expansion on Bitcoin. Again, I'm not giving you targets, I'm not telling you how far this will go, but what I can say with quite confidence is that the all-time high run we will have before ending up with a range on the chart will last around 2 to 3 weeks. So what that basically means is, when we start to push to new all-time highs, please don't be the guy that tries to short every single high on the chart, because the chances are you will keep getting stopped out. And this was the case for so many players who have tried to short the market in November. They thought that we were pushing new all-time highs, they can just short the range high and they'll be good for the rest of the year. But that was not the case. A lot of people got stopped out just thinking of that perspective that most of you could have on the chart. So what I want you to do is, I want you to have some certain concepts in your mind where you can use forever. Well, one of them that I love to use is what we call a VWAP. It's the volume weighted average price, and you want to use it on the session perspective, right? Session means the daily period, and when you anchor it on a daily perspective, it actually resets at every daily open. And when you have this on your chart, what you will see is these anchored VWAP levels, they get respected so highly during these all-time high runs, especially the first 2 weeks. As you can see here, after having this initial push higher on the chart on the 6th of November, we can see the price came down, hit this anchored VWAP of the day, pushed higher, came down once again, hit this anchored VWAP hit this VWAP to the dollar here and pushed higher. We lost the anchored VWAP here, right? We came below it and we pushed above, another hit here, and another move to the upside. So this level right here is one of the ones where you can actually use, because this will be a volume support level on the chart every single day that we're trending. Here we can see during this trend that we had from the 9th of November up until the 12th of November, we tested this level so many times. We tested the level right here, we tested it right here, right here, right here, right here. So there was so many opportunities for you to enter long positions if you just use VWAP as your main tool of entry. So this is one that you should be aware of and you should have on your chart. Now, if you want something a bit more interesting, if you want to have something that is a bit more advanced, what I would advise you to use would be the volume profiles or TPO profiles on the chart. So if you want to have volume profiles of every single day, what you can do is you can come on your trading view, you can write PVP right here, and you will see this periodic volume profile coming up. This is not a tool that I love to use because I already have a Exocharts subscription, which is the data platform that I use. But if I did not have access to Exocharts, this would 100% be the tool that I would use. So how it works is when you come here, what you can do is you can change this period to a daily period so that you will see the volume profile of every single day on the chart. Now the colors currently look really weird, so I'm going to close the VWAP here, and what I want you to do is you should come here and change this row size from 24 to 200. And when you do this, you will see that now the volume profiles are a bit more, they are more accurate because now the row size is bigger, so every single level looks a bit more accurate. And with that, I want you to also extend the point of control right. I want you to click this button and also come here and change these colors to something better, because white as the point of control is crazy, and these value areas as these levels are kind of weird as well. So what I want you to do is I want you to have these colors as something that is, doesn't look too autistic, and something that looks a bit more fresh on the chart like this. So when you have this on your chart, what you will see is this is the point of control of every single day. Now, are these as accurate as the data that we get from Exocharts? No, but if you don't want to pay money to any software, this is your best bet. So what you will see here is these levels here, they are the volume confluence factors that you might have with the VWAP on the chart. As we talked about, so during the all-time high runs, you will not have opportunities where you can enter the market with the liquidity sweeps on the chart. But what you will see, like we have here, is price will come down. Rather than taking out these lows, price will actually hit the point of control of yesterday and then have this massive rise on the chart. And after this happens, price comes down, creates this point of control in the 14th of November, and then on the 15th of November, you can see how we actually hover around this level, push higher, and come down, test yesterday's point of control, and then we have this beautiful push. Here, same thing here as well. We have this point of control from the 15th of November, which is untapped, and then price hovers around here on the 16th of November, and then on the 17th, on a Sunday, comes in, test this point of control, which is untapped, and then has this beautiful rise to the upside here as well. So these levels work really well, and they're really useful, and they are free. So I think that's the best bet you have. I do believe these are even better than VWAP, but I think if you can use them together in the first 2 weeks of an all-time high run, I think that will be even better for you. So what I want you to do with these levels is I want you to remember that these will be useful for you for the first 2 weeks or 3 weeks of the all-time high run. So when these prices come in and you're coming to these levels, let's say if we can find one from the previous run right here from $74,000. So this is a good example right here. So as you can see, when we had this point of control from the 8th of November, this level was tapped on the 9th of November right here. And this was a beautiful tap that happened right here. And what you could have done if you did not have these point of control levels was you could have waited until these lows were taken out. But unfortunately, as we talked about, that does not happen during the first 2 or 3 weeks of the all-time high run. So when this point of control is being tapped here, what you can do is you can wait until we actually have a reaction like this, right? Price comes in, has a red candle, and then you can clearly see visually that a green candle is being printed here, and after that 15-minute candle has been printed, you can actually take a long position with a stop loss below yesterday's low. And I know that sounds crazy because you might ask yourself, or you might say to yourself, well, AG, why am I longing with a stop loss below these lows? Aren't we so likely to take out these lows at this point? yes, in 50 weeks out of 52, but in the first 2-3 weeks of the all-time high run, that is not the case. You can easily have moves like this where you have a really tight stop loss. This is a 0.49% stop loss for your take profit one above yesterday's high. And in this case, this is a 1.63%, so 3.3 risk reward ratio trade as your first take profit. And again, since this is just 3 days into that all-time high run, the chances are you're going to be able to hold on to this position for way longer on the chart as well. So again, previous days point of controls like this work so beautifully on the chart. Let's give another example right here to show you what I'm talking about. So this is a good example as well. As you can see here, we have the point of control of the 12th of November at 87,111. So this level gets tapped the day after on a Wednesday. And what you could have done here is you could have waited until we have this tap right here. And you can see now we have a green candle right here. So you have clearly see the reaction here. So after seeing that reaction from that point of control level, you can actually take a long position right here, put your stop loss below yesterday's low, and then aim for $100,000 on the chart with your take profit one being above the yesterday's high. That is so crucial, right? Sometimes it will be a case like this where the risk to reward ratio will just be 0.92, but just remember that you'd rather make money than lose money on the chart. So when you are right about your thesis and you just, you've been correct, you want to make money, you want to secure profit. And this system right here is a system that works only for 3 weeks out of 52. So when those times come, you want to actually extract as much profits as you can from a system that just keeps working. So another example like this would be what we had, let's say, around here, right? So as you can see, we had this point of control from the 15th of November, and this was untapped on the 16th of November. So we just hovered around above this level. And on the 17th of November, we came down, and after hitting this level on here, and the 15-minute candle has been closed, what you can do is you can put your level like this, have your stop loss below that day's low, as you can see right here, below this low right here from the 15th of November, and then aim for 100K, 110K, whatever you want to aim at, and have your take profit one above the high of the 15th. So as we can see here, this is another one where you have 0.88 R, or actually, is it 0.88? No, it's from here. Right. Oh no, it's from here, so it is 0.88 R. And you might say, well, AG, isn't that really low? And again, as I said, like, do you want to make money or do you want to just be the guy who just keeps on missing out on every single move? For me, I'd rather make money than just miss out on every single move for a period of time where the chart just keeps looking bullish. So this is a system that is so simple yet so effective on the chart. Now, if you want to be even more advanced and trade like me and trade levels and trade intraday levels, what I would advise you to do is I would advise you to use Exocharts, because during this 2-3 week period where you might literally have it next week, you want to make sure that you have the best tools available to you. And for me, the best tool I've ever used on the chart, and this is not just coming from me, you can talk to any member in Tag Team as well, is the session untapped point of controls that we have. This is a template that we have on Exocharts, and if you log on to the Exocharts, you'll see that we have this template right here where it gives us the time point of control of every single session on the chart. So the purple one you see is the New York session, the red one you see is the aftermarket session, the yellow one is the Asia session, and the green one is the London session on the chart. And when the price is pushing up, the last thing you want to do is miss out on these moves. And what will end up happening on the chart will be moves like where we'll come down on the chart and hit the session MPOC, just like we did on this New York session. As you can see, we had the yellow sessions, the Asia sessions time point of control sitting at 108.785, and the New York session came down, hit this level to the perfection, and had a massive reaction that was around $2,000. So moves like this will always happen from session MPOC levels. And if you want to have these levels, you can literally have it right now. If you get into Tag Team, you will have it from day one. We have a dedicated section for those ones. I teach you how to import these templates to your Excel charts, and also you can have all of my templates that I have built as well. So If you want those, join the tag team. I also teach you how to use these concepts as well. If you go on the tag team, there's a whole education site for Exocharts where I teach you open interest, footprint chart markers, delta, CVD, PDV setup, which is an amazing setup that was produced by Jim Dalton. So if you want all of these, join tag team and you will literally have it right now. So back to the charts. When I have those levels, I can trade with a bit more consistency and through advanced, advanced data. But if you don't want that, cool. You can just use PVP and VWAP here as well. So that is the first 2 weeks of an all-time high run. I hope I made everything clear. If I haven't, please leave a comment. Tell me what you have not understood. And if you like this, by the way, leave a like as well. I really like seeing your support. This is an educational content that I'm releasing after a long break. So if you can show your support, I would really appreciate it. Now, after this 2 weeks, what usually ends up happening is we will usually end up having a range on the chart. So this range could become a bullish range or this could be a bearish range on the chart. So what I mean by that is after having this 2-week push on Bitcoin starting from the 6th of November up until the 22nd of November, we had this range right here where price was going sideways, and at this point it's so hard to understand if we are pushing lower or higher on the chart. So what you should be able to do at this point when we are starting the range on the chart is you should be using your brain as if everything is just going to stay at the same levels for a long time. And I know that is hard to do, but that has been the best way to manage all-time high runs after the initial 2-3 week pump that we see. So what I am looking for when we see new all-time highs on the chart is I will be trading and longing in the market when I see a push like this and we are holding on to these levels. I will not be shorting the market. I have no intention of shorting the market when in the first 2-3 weeks where the price is pushing higher, and I will just keep on buying the chart and keep on trading and longing in the market until, right, let's say we start this all-time high run on the 9th of July, I will keep longing in the market until August. And in August, what you will most likely see is we will either see a range, we'll see an ascending channel, a wedge, a triangle, any type of formation where it's either an accumulation or it's a sign that we're about to fall down. So that usually ends up being longer than the initial increase in price. So what I mean by that is if the increase in price takes us 2 weeks to actually go there, it will take us at least a month before that range breaks. So what that basically means is after seeing this 2-week increase in price, please don't be the guy that just thinks we're going to be doing this, because the chances are we're not going to. Or please don't be the guy that thinks that we're going to be just doing this, because most likely we're not going to. What will usually happen after this 2-week run that ends around the August time, if we end up breaking it on the 9th of July, is we will actually end up having this range that will take us at least a month where we're just hovering around here, doing this move right here, and everyone will just get bored, and some people will call this a accumulation, some people will call this a distribution pattern on the chart. So what I want you to do at this point is I want you to be extremely vague about your analysis. And what I mean by that is you don't want to be the guy who is calling for higher, or you don't want to be the guy who calls for lower. Best way to play these ranges on the chart, just like the range we have here and just like the range that we have here, is having shorts from all-time highs and having longs from the lows. That is the best way to play, even though it's, easier said than done. So when we have these moves, one of the most common patterns that you will see is we will push higher and have these swing failure patterns or failed auctions around, 3-4 weeks into that range. We have seen the same thing happen with this one, and I truly believe if we have this all-time high run, we'll see the same thing on the chart here as well. So when we have that swing failure pattern, it could end in 2 ways, right? At this point, we might actually have this distribution pattern where we push lower, or this could just be a continuation for higher on the chart. And you don't want the guy who guesses it. What you want to do is you want to have a short position around these levels and you want to have a long around these levels right here. And I know that sounds hard, but that is not hard if you know what the time frame is looking like. So I want you to understand that when the chart starts to actually range, so let's say we end up breaking this range around the, let's say next week, right? Let's say we don't do it this week and we actually end up having this range break, an all-time high break on the 15th of July. When you see that, and when you see the all-time high is being broken, and you're seeing this 2-week uptrend or 3-week uptrend that goes up until August 5th, at this point, I want you to be extremely vague about your analysis. So what that means is I want you to have first wait until for a week for a range to form, and after this week forms, what I want you to do is every time you come at these lows, you look for longs, because there is a chance that these are the lows that we're going to be putting in for the rest of the summer. Or subsequently, if we end up pushing higher on the chart, I want you to look for shorts around these highs as well. Even though your analysis or your guts might think that we're pushing higher, have some shorts running from here. Because if we truly end up pushing lower on the chart, the how proud you feel from having that short position from all-time highs is an unmatched feeling. And same goes for longs that are coming from here as well. Having a long from 100K, having a long from 78K, having a long from 117K would be a feeling that you always want to have, because it's just a complete feel of competence that comes from the fact that you have not guessed the price action. You played both sides of the range, and when the range broke to the upside, now you have a long running from the downside. Or other way around, if you have a short running from these highs right here and the price comes down, now you have a position that you can flex on everybody on. All of your friends, all of your family, all of Twitter. You can tell them that you just caught the highs because you just knew the time frame. And I really believe that this will not just end in a single top. I truly believe that this will either end in a range like this, or as I said, it could actually end in a wedge pattern as well, right? I can't guess that, unfortunately, but this could be something like this as well, where we come down, where we put in a triangle right here. And when this triangle happens, I want you to look for shorts when we have a move like this. Or when we push lower on the chart, I want you to look for longs around here. So that is how I would play it, and that's how I will play it as well. So if you are interested in these live analysis, so when we push the all-time highs, if you want my guidance and see what I'm doing, see what trades I'm taking, join the tag team. We have a Discord channel right there where I'm going to be running through the price action every single day that we are at all-time highs. So you don't want to miss out on that one. If you want your own, guidance, go with that. I hope this video helped you. But if you want more, join the tag team, because I'll be there every single day as well. So thank you so much for listening to me about this one. If you want a part 2, if you want me to talk about a different subject, please let me know. But yeah, if you liked the video, please leave a like, please leave a comment, and I will see you with next week's market update. Bye-bye.